My days, ladies and gentlemen, welcome to today's live. It's been a good old weekend, has it not? Trump is out for blood. He's really diving into whether or not he can actually get rid of Jerome Powell. And the consensus across the board is he actually going to achieve firing Powell? And what impact is that going to have on the marketplace? Well, it's not looking good, guys. The dollar itself is heading very close towards that 96 level. Investors are not liking what Trump is doing. You're mixing politics with finance, and his problem that he had originally with Powell was being political. But Trump now is being political and putting it all into the finance sector of the world, and it's not looking good. Investors are only out for one thing, and that is yield. Today's live stream, we're going to break it all down on what is going on, what we can expect, because we are down a pool of liquidity, given that the Eurozone and the UK are closed for Happy Easter Monday. Happy Easter to everyone. Christos Anesti to all the Greek mandem out there. But anyways, today's live, I'm just going to break it all down for you. We have had a bit of fun with cryptocurrency, but we got a little bit of problem with that, guys, because the people that are buying Bitcoin on the dip are selling it as they get a chance to. And that's not good for us. But maybe we are heading into probably one of the biggest transitions that are going to happen in this financial world. You see, for every crash that happens in the marketplace, the market successfully recovers back from that. Remember, the stock market has a 100% success rate at recovering from crashes. We just need a crash. And this move to the downside in the stock market, given that it's only around 26%, but it's actually a little bit up now because of the rebound that we had a couple of weeks ago on tariff news. Like now it's not tariffs anymore. It's like no one's talking about tariffs. It's now let's get rid of Powell. And the problem with getting rid of Powell is you're undermining the dollar, and investors are making it very clear about where they are going when it comes to seeking yield. When I say yield, it means where am I going to get some money? If I put my money to work somewhere, where am I going to get a return? Regardless of all the shenanigans that are happening and the concept of given bread and circus coming into play, getting everyone's attention away from one thing when something else is happening behind the scenes, it's one of those scenarios that we've got, which is going to lead to quite an eventful move happening in the marketplace. So if you are new to today's live stream, welcome, ladies and gentlemen. I hope you've had yourselves a nice little break. We're going to get into it all. I'm going to break down the logic of what is bloody going on in this marketplace. So hit the like button, subscribe, do all of that fun and games. Let's get with the program, guys. We'll start. Well, actually, let's start again. Let's get with the program and let's have a conversation. I said that twice. Forget it, man. Here we go. So stock futures are down. And why are they down? Well, let me ask you a question. If your dollar is deemed worthless, what are you doing? Are you actually going out buying stock? Why would you go and buy stock right now? Your dollar is pathetic. And on top of that, you have no purchasing power. You are negative with your purchasing power on the dollar. What do I mean by that? Go over to the dollar dominance itself. Look at this. Your dollar right now is trading at 97.7, all right? You only really want to put your dollars to work when it's trading above 100. Why? Because if we go back and look at dollar when it was at 104, that means you had 4.2% purchasing power on the US dollar. Well, that's good news. You know, you're actually being able to buy, in terms of value, more stock based on the purchasing power of your dollar. Now, whatever you're buying, you need more dollars to actually achieve the better rate of return of exchanging dollars into whatever asset it is that you want to pick up. So if we go and buy Bitcoin right now, well, you're not really getting that much Bitcoin because your dollar itself is just taking a stab to the downside. Now, the general consensus is that the dollar is going to continue to go lower only because of this story that we've got with Trump and this Powell thing. Listen to this. He goes here that Trump, frustrated that the central bank hasn't moved to lower interest rates, posted on social media last week that Powell's termination cannot come fast enough. The problem that we've got with Trump trying to get rid of Powell is it's undermining investors' thoughts towards US debt. Now, Arthur has touched up on a very important thing right now. Bitcoin rally above 100K may follow regarding the US Treasury buybacks. The actual term when the US Treasury does decide to buy back bonds is portfolio balance. So what they're doing is they are creating a lack of supply by stepping in and buying US bonds. So when we go over and look at the bonds market itself, we can see clear as day that you've got the bonds getting smacked left, right, and center. Look, on the daily time frame, it's looking like it's getting ready to come back down to fill this gap that we've got right here between the 100 and the 97 zone itself. The problem that we've also got is the 2-year yields and the 10-year yields are starting to paint a different picture. Now, for anybody new to the idea of why I focus on the yields and the bonds so much, is because it shows commitment from investors. If you're not going to pay attention to one of the largest and most liquid markets in the world, given that the bonds market is roughly around 135 to 140 trillion dollars in market cap, then why would you be focusing on anything else? If they're not even buying the most low risk, cheapest thing out there, then why on earth would they go out and seek high risk anywhere else? So looking at the yields market, you can see the 2-year is currently trading at 3.76%. So if you go to the US government and say, I want to buy a 2-year bond, you're picking up 3.7%. All right, that's not bad. Go to the 5-year, currently trading positive at 3.949%. Okay, I may as well go to the 2-year, given that I hold it for a less amount of time and near enough earn around the same amount. Okay, then fine. Let's go to the 10-year. What? Why is the 10-year going up? Why is the 10-year trading actually 1% positive in comparison to the 2-year and the 5-year? Well, it's pretty simple, ladies and gentlemen. Investors usually turn to the 10-year bond. And whenever the 10-year bond yield gets to 5%, that's when it grabs people's attention. So people are actively selling the 10-year bond market now. They are selling it. And we know that China wants to sell bonds, but are they selling? Check this out. In front of you is the chart that shows the world major economies holding US debt. Now, everyone's like, China's selling bonds, China's selling bonds. It actually isn't. Look, it's actually going up. So they're actually purchasing bonds right now, okay? Now, the thing is, this is obviously, the reading is in February. I haven't had the full reading just yet, okay? But it wouldn't serve China to sell the bonds right now. Why? Because it's like they already know what's going to happen. They know that the Fed is going to get pushed to a position to start buying back the bonds, which will naturally inflate their returns as bold holders, okay? Now, with that being said, going into it all, you can see that you've got 4.379% on the 10-year, and then, of course, the 30-year coming in at 1.35%. What is the problem with this? Investors are demanding more to hold on to longer-term dated securities. So if you're going to start buying US 30, well, investors are like, sorry, we're not going to get involved in that unless we get a higher rate of return. Now, the next question is, what could actually validate the idea of the yields going up? And I'm going to be thinking to myself, is this actually a ploy just to purposely actually ruin the US markets? Does Trump want to destroy the dollar and effectively reset everything? Maybe. But this story about Jerome Powell and him getting rid of Powell is going to really knock the confidence of investors, which will naturally descend the yields even higher, which naturally is going to hurt the stock market. Going over into the stock market, you can see it's already down nearly 1.54%. Investors, there's no point in holding on to US stock right now. There isn't, because it now means that your dollars are deemed worthless, and when you're selling the stock, you're not going to be getting anything. So right now, there is this thing about maybe we're going to be getting into a very, very interesting discount on stocks. Hypothetically, I've come with the idea that NVIDIA, if we have a look at that, is currently gapping at the open. It's gapping down at the open to go at 98. I've got a price projection of $90 on NVIDIA, and I do think that it could actually go down even lower, even though NVIDIA right now is looking at making its own AI supercomputer as well. So there are things that are happening, but the problem that we've got is gold is still rising, and that is a problem. When gold still rises, that means investors are still concerned. Now, in my opinion, would be a risk to start buying gold. Why? Because hedge investors have not yet prepared themselves for the next hedgeable event. They are selling the event right now. Why? Well, let me explain something. If the idea that Jerome Powell is fired, that means that the Fed is going to replace him with someone who is a little bit of a Trump follower. So naturally, the interest rates are going to get cut. According to the way things are right now, we don't have that story. The logic of interest rates being cut is based on these target rate probabilities. They don't think that the rates are going to get cut. If Trump manages to get rid of Powell, then this is going to change and they are going to see the rate cuts. That's why gold is going up. Why? because when the interest rates are cut on the US dollar, naturally you're going to look for a yield elsewhere, even though gold is deemed as a zero yielding asset. It's all based on when people have a sentiment of feeling whether they are concerned or they're in fear of something. Well, we know that the war with Ukraine and Russia is sort of coming to a truce, even though Putin has called for a truce and then he's still attacking. But anyway, that's another story. But logic says that there is going to be an expectation that if Trump succeeds at getting rid of Powell, the interest rates are going to get cut. Gold will just keep on going up. Now, Goldman Sachs did say that they are looking for a price projection of around 3,500. Well, that's near enough on its way, but there is the possibility, due to the uncertainty of what's going on economically speaking, that gold could actually surpass and take out 4,500. So if you are going to run the risk of taking positions spot on gold right now, and I'm not talking about going and buying the misses a gold ring, that's just dead. You don't want to be going and buying jewelry yet. You want to be buying it when gold is starting to correct. But if you're going to start buying gold right now on the logic that you are playing a macro event, which means that if we don't have any structure on what's going on with the interest rates, but the expectation is they are going to cut, gold's price is going to continue to climb higher. It will be a very short-term play, but once you do see gold making moves and you're realizing a return, make sure that you are paying yourself, which leads me over to this next thing. In front of you is the bond ETF marketplace. And you can see that the bonds are starting to show interest in terms of the ETFs. Why? Because investors know that with the dollar losing its precedence and the inconsistencies of what's going on with Trump and the tariffs, and that we've got the story of a tariff inflation coming into play, Jerome Powell being kicked out, then the logic says that there's going to be an instance when the US is going to step in and start buying back the bonds. People are positioning themselves for that. Now, the ETF markets have around $6.5 to $7 trillion worth of capital locked in there because investors turn to ETFs to effectively diversify any exposure they have in their portfolios. You can go and get yourself various ETFs. You've got, of course, the Vanguard Total Bond Market, iShares Core US Aggregate Bond. These are just normal ETFs that you can go and buy, put your money in, and leave it. When there is a change in interest rates, in my opinion, that's when you pay attention to bond ETFs. Now, you can start running shorts on these ETFs if there is an expectation that they are going to increase the interest rates, or you could actually then run longs on ETFs on the idea that they're going to cut the interest rates. So that means investors are going to see the yields coming down, so they're going to want to step into the bonds and lock in the yields at the levels that they are at right now. But we've got events that could lead the yields to shoot up even more, and we're looking for the idea that if Powell is removed from office, that is going to rock the bond market completely. We could get another bond massacre in 1974. It could be the case, because this is going to be then a new person stepping into the Federal Reserve with a whole new idea of what they're going to be doing with the story of interest rates. So once you now have that logic in your mind and understand that, okay, maybe we're going to have a bit of a problem in the stock market, what does that do for crypto overall? Well, in the cryptocurrency scene, we've had some interesting behavior. Tether mints $1 billion worth of USDT. Everyone's asking, where's Solana going to go? Solana ain't going to be going anywhere because this story about the ETF is looking like it's coming into action, where there are the odds that it's going to end up becoming an ETF, 74% chance of it happening. It says Solana's open interest rose 10.1%, reaching 5.5 billion, signaling increased trader activity. That is wonderful news for us, ladies and gentlemen. Going into the price action of Bitcoin and having a look at that bad boy, we did see some nice movement over the weekend. We kind of had it covered for the platinum members. I shared to them a projection last night on the idea of where I was expecting Bitcoin to go going into today. And I'm going to be resubmitting another outlook on where I expect Bitcoin to end up at the end of this week. But we saw the success of Bitcoin going up, and this was on the logic of the midpoint of the vector candle. So if you look here, I marked off the midpoints of the vector candle for those of you who know, and these are the 50 percentile zones of the vectors, which is where price tends to react if the idea of the market's memory is going to get triggered at that point again. And when you look at those levels and see how prices behaved at the 85,030 and the 84,797, you'll understand what that is. And you can see that they cleared out the range and they ended up sending Bitcoin to the upside and clearing out the top end of the move at 87,833. So you guys just make sure that you're taking some profits if you have actually exploited that move, because Bitcoin has done something interesting in the sense it's marked up with the promise that there could be a potential retrace back down. Why? Let me explain. In front of you, oh God, look at all these liquidations. Now, look, you see this area right here? This area right here gives me the understanding and tells me the psychology of investors when they're playing around with Bitcoin. Let me show you something. Here you've got a couple of orders. You've got these big orders that are coming in. So you've got 40 million, 0.54. $40.54 million worth of Bitcoin was purchased at the 84,500. Okay. As we go up a little bit here, you then start to see some interesting behavior. 40.87 million was sold at 85,555. What does that tell you? Tells you that anyone that's playing Bitcoin right now is buying it to sell it straight away. So when you're looking for people on X or any social media platforms to reinstall the idea that Bitcoin's going to keep on moving to the upside, be mindful. Because if you've got a participant that is buying Bitcoin at 40 million down here and then selling it as it makes its way up towards a nice, what was it? What, even $1,000 move on Bitcoin? It was nothing. That tells you that investors are short term. They're in and they are out. And we've highlighted this back in the day when we were talking about new whales coming into the marketplace with a bit of cash, buying up the Bitcoin, giving everybody hope, and then getting rid of that exposure just to make a bit of change. That's where we are right now with everything, ladies and gentlemen. The market doesn't have a clue where to put its money. The culprits that are forcing the dollar to the downside are your euros. Look, euros at 3.32% on the back end of changing dollars over to euros over a 28-day period. So DTE is days till expiry. You're going to be picking up around 3.32% minus the fees. Will make it to around 3.1. Okay. Same with the Japanese yen, 7.62%. Now, with regards to the Japanese yen, we got a problem. Bank of Japan likely to continue interest rate hikes despite the US tariffs. That is a major problem. Why? Well, historically, on the 5th of August, we know that when the Bank of Japan increased their interest rates, the stock market took a wet bed. Well, actually, they wet the bed. They shit themselves. Why? Because the carry traders were then aware that they are now locked into higher risk because they had borrowed yen, converted it to dollars, and put those dollars to work and start buying stocks. Now, if there is the expectation that they are going to increase the interest rates, regardless of the story of what's going on with tariffs, then is there still more pain ahead? Well, when I say that, all I'm trying to get you to understand is the euro itself is trading out nicely to the upside. It keeps on going higher. And of course, there are price projections that euro is going to keep on succeeding beyond the 1.16,000 zone. Okay. On top of that, the Japanese yen itself, even though that Donald Trump does not like the fact that the Bank of Japan is manipulating the yen, it's not serving the yen to actually keep moving up. It's going to hurt them in trade. Okay. Especially in the exports. But if the yen keeps on going up, they are effectively going to be positioning themselves for the benefit of it somewhere else. Why? Because the lower the dollar goes down, the lower the bonds market goes down, the sooner that the Fed is going to step in and start buying back bonds, creating an eagerness for investors to pick up the supply of bonds that is there. And especially when the bonds are being purchased by the Fed, that's naturally going to send the yields lower and the bonds are going to shoot up. Who's going to win? Bank of Japan and China. Why? Because they're the two largest holders of bonds. Japan's up there first place. So with the Bank of Japan, it's like they need to do tit for tat. All right. If they see that there is the strength in the dollar, what do? They go and buy themselves dollars to convert to yen just so that they can reduce the exposure of the dollar against the yen. Having a look at that, that's called Forex intervention. Go over to dollar yen and you can see that the dollar yen is just taking a nosedive and we are in very comfortable environments. And this is what Trump doesn't like. He doesn't like the fact that the Bank of Japan does manipulate currencies. And I said this, we are in a currency war right now. It's put aside the idea that China is now trying to prevent any nations who are working with Donald Trump. China's going to be putting some tariffs on those guys. I say they're going to be putting on sanctions. Sanctions are the next thing that's going to happen, ladies and gentlemen, because it's just not ideal with where we're going right now. Trump is playing a very interesting game right now. If he's going to step in and get rid of Powell and cut the rates, he does run the risk of sending interest from the US bonds straight over to European bonds, to Japanese bonds, to Chinese bonds. That's how you're wiping out your dollar. And what's the best way to get rid of something? get everybody to turn against themselves. Well, Trump is, in essence, in my opinion, is turning against himself with the behavior that he's doing in regards to the bonds market. But he did say that there will be a little bit of turbulence. There is going to be a transitionary period, and that's not going to be good. So he's addressing that. But the long run is saying that the dollar is going to come back reigning supreme. Remember, it's the world's currency. So naturally, that's going to end up picking itself back up. And everyone that's got it in for the dollar, whatever nation, whether it's Russia, Saudi Arabia, anyone, most of their assets are tied in dollars. So they're going to really do something about it when the shit hits the fan. Does that make sense, ladies and gentlemen? If not, never mind. Watch it again. Bitcoin price action. Any questions, guys? The cash dollar is going down like crazy. If you hold cash or dollars, it's getting, yeah. Listen, if anybody does have dollars right now, in my opinion, it's not financial advice, it's common sense. Because if you're in the game of investing, you'll understand that there is a transitionary period right now amongst foreign exchange. Before you're buying Bitcoin, before you're buying stock, before you're buying ETFs, what's the native currency that you need to be paying attention to? It's dollar against the other asset that it trades against. Whether it's euro, whether it's yen, they are going to transact on those currencies and then get those currencies and put them to work elsewhere. In other words, if my dollar is going down, I'm naturally going to end up seeing a better rate of return when I get involved in euros. 3.32% just for changing up my dollars into my euros. Done. Well, maybe I don't want to just sit in euros. What am I going to do after that? Well, I may as well go over and start buying European bonds because China's encouraging everyone to start buying European bonds. Hell, China's probably buying European bonds. Okay? So we know they're not buying US bonds because the US bond market is taking a stab to the downside. No one's transacting on the dollar because the dollar is taking a nosedive. So now investors are starting to go over to other assets like gold, like Bitcoin. Okay? But remember, Bitcoin is deemed as a high-risk asset. All right? So the mindset of your mum and dad investors is we need to go over to gold right now because gold is what we know. They're certainly not going into the US bond market. And if they're not going into the bond market, they're going into the European market. And that's why the euro and the yen, if you look to the left, you've got rates. The euro is at 2.4%. The yen is at 0.5%. So with the yen looking like they want to increase the interest rates, that can tell us that we're going to end up seeing even more pain across the board. Because when I look at it, I'd say to myself, hold on, the dollar's already taken a smack to the downside. Is there still more to be had in terms of the carry trade? But I think the carry trade has been happening underneath our noses. And they've been offloading. And then when the Bank of Japan do increase their interest rates, I actually believe that the yen is going to come back down. It's going to do the flip side to it. But then on top of that, the dollar could actually continue to go down and the yen even shoot up even more. As long as euro maintains these rates and the yen maintains these beneficial rates right here, then ladies and gentlemen, your dollar's just going to keep on going down and down and down until the Fed steps in and buys back the bonds. If we don't hear about them buying back the bonds, because we know on the Powell's policy, they ain't buying no bonds. They are not doing anything. They are sticking to the high interest rates just so they can control inflation, and they can't do anything until the tariffs come into play. And if it gets to the point where Donald Trump is forced into a position to be like, hold on, I can't really do anything about getting rid of Powell. That means we're going to have interest rates higher for longer. Then he might actually backtrack on these tariffs. That's going to look shit on Trump. And I don't think Trump's going to be looking like he wants to give that impression to the world. So it's who's calling who's bluff right now. Investors haven't got time to sit around and wait for that. That's why you're seeing the markets maneuvering money all over the place. You've got to pay attention to where they are in terms of euro, in terms of yen, in terms of pound, in terms of Swiss franc. They're all getting maneuvered, getting ready for the next thing. Right now, it's the dollar's turn to get annihilated and smacked up. And that's what's happening as we speak. So if you do have yourself dollars, courtesy to the idea of what's going on with the inconsistencies of where we are with tariffs, on the idea of interest rates and Powell getting sacked and what have you, seeking liquidity elsewhere. Now, for you guys, you got to understand that this is through different asset types. These are different instruments when you're exchanging euros to dollars, dollars to euros. Okay. But if you are going to be considering trying to hedge yourself, the idea is taking out of dollars, seeking the alternative of what the euro provides. In other words, usually when the dollar's going up, it's beneficial to go and buy US stock. So if the dollar's going down, you're then going over to the European zone and you're going to buy European stock. Why would you do that? Well, is it costly to borrow euros? No, you get 2.4% on a charge, or you pay and borrow dollars at 4.5%. Naturally, the higher yields do actually bring investors to the table and say, you know what, 4.5% interest rates. Yeah, man, I'm going to put my money in dollars. Well, that's not the case right now because you've got mounting debt ceiling's been increased. You've got these tensions overseas. Tariffs are coming into play. You've got inflation. The Eurozone's sitting nicely with a 2.4% interest rate. I can borrow some money over there with the euro and I'll buy your bonds and I'll buy your stock. Happy days. Let the dollar do its own thing. Or you could go and buy Bitcoin. But just prepare yourself for some crazy ass volatility. Capiche? Tino, can you explain the simple terms? So why Trump would want cheap dollar? In my understanding, is to encourage US export. But why would he be pro crypto at the same time? Look, fundamentally, Bitcoin has been delayed in its move to the upside. It has, because the dollar has just lost so much of its appreciation. Okay. However, this may be dollar going down. This is accumulation. This could be accumulation because logic is right. Bitcoin hasn't really gone anywhere. All right, it's made a sweep down here to 74 and made it back up again. But Bitcoin hasn't really done anything. These up-down movements are just pointless. When you go to the daily time frame itself, it starts to paint a very interesting picture. What are we waiting for? We're waiting for 3 daily candle closes above the 50 EMA. Weren't we talking about the death cross last week? I certainly wasn't. I was giving you guys a reference to it, and everyone was expecting it. There's the daily candle. All right, so now I've got to pay attention to that because they've managed to get above the daily 50 EMA. That's important. What am I looking for? I'm looking for Bitcoin to show me another 2 days worth of price closing above that point because they've made it above there. Can I back that information? Well, let's just go over to the stock market and understand where we are with that. Do I have accumulation days on the stock market? Look to the bottom right, guys, and you'll see the NASDAQ and the S&P. All right, so given that we've had 2 days where we have been behind on liquidity, you can see that there's not that much volume coming into play on the NASDAQ. The accumulation days, given that they're blue bars right here, they're not coming in. So how do I justify Bitcoin's move to the upside? Is it because the decoupling is happening? Is that happening? How can it be happening if investors are coming into crypto and selling it at the same time? Got guys buying $40 million worth of Bitcoin right here. Okay, where is it? Let's get our 40 million just to be consistent with it all. Come on. Where are you? There you go. It was 41 million. Okay, 30 million in that range as well. And then they're selling exactly the same amount up here. Where was it? 85? Bloody hell. There you go. 40 million right there. Yeah? Well, hold on. If you're in with the trade and you're in for the Bitcoin to go higher, why are you selling it there? Why would you be transacting at 84,000 and selling at 85? Shows you that sentiment is not favoring the long term of locking money up. And we can see that is already evident by going over to the bond and the yields market. If they're not prepared to go into the 2-year, if they're not prepared to go into the 10-year, and they're not prepared to go into the 30-year, and that is evident with the way the yields are moving up, because if the yields move up, it means the government is offering a higher rate of return to get involved and buy US bonds. Why would you think Bitcoin's going to go any higher? You're putting logic to how money moves. If the bonds markets ain't getting the liquidity that it wants and they're offering higher rates of return for doing so, that means investors are waiting. They are waiting for that event where the yields shoot up aggressively, stock market slumps, government steps in and buys back the bonds. You've just had yourself a market reset, yippee-ki-yay to the upside. We're just waiting for that in one more sweep lower. That's not me being negative. That's telling you the trajectory of how human nature behaves. Just go and have a look at the historical evidence on how the markets react to certain scenarios. When the bonds crash and when the yields shoot up, it starts your big market movements. We even go over to the idea of sentiment. Look, this is dumb money, smart money, okay? And I'll show you this chart. Here we go. Look at that. That there tells you that smart money is buying when prices are dropping. And they've been buying bloody aggressively. If we look at all the data, okay, look at that. We are at the highest point since, wait a second. The highest point was 0.9, and that was in 2007. Subprime mortgage crisis. We are right now at 0.85. We are not too far away from what could be the big market reversal that we're all looking for. But we need the event. Is it going to be bond related? Is it going to be financially related to the economy? Because the economy is doing fine, ladies and gentlemen, going into the calendar this week. We don't have anything to worry about. Manufacturing data is coming out for the Eurozone. Okay, that's fine. We've got the US dollar data coming out on Wednesday. Flash manufacturing PMI over there. We've got the usual suspects with the unemployment claims and core durable goods orders. All right. And then if Trump decides to turn around and say something about the tariffs, then we've got to deal with China. Well, it doesn't look like the deal's coming into play because China's demanding respect. J.D. Vance called people in China Chinese peasants. Okay, you don't do that with China. You do not say that about China. And if you're going to try, they are happy to let their economy slump purely on principle. They are honorable people. You taking the piss out of them like that? They don't care. They've been around for 5,000 years. I'm sure they can adjust. And that's coming from one of the seniors representatives of the Bank of China. So, yeah. Anyways, ladies and gentlemen, I've kept you busy. I've kept you occupied. 31 minutes flavor in the live stream. If you are new, be sure to like and subscribe on the way out. Tune into tonight's flavor and let's see what the market has in store for us today. Just take care of yourselves, pay yourselves, take some money off the table, and we'll tune into you all later on. All right? Take care of yourselves, gang. Mad love. Peace. I need to stop this winking. It's bugging. It really is.